Could Donald Trump, sitting 13,000 kilometres away, tank the value of your home in New Zealand? Spoiler alert, yeah, maybe. Today, Kelly Eckholt, Westpac's chief economist, returns. A man who probably dreams in interest rate curves and wakes up to CPI data. We're diving into how Trump's tariffs could slow the Kiwi property market, and when you're wanting financial freedom faster, it's something you want to know.
Financial freedom faster. Financial freedom faster.
If you like making money rather than watching everyone else do it, hit that subscribe button and get ahead, because this is New Zealand's fastest growing real estate and investment show. Are Trump's tariffs going to set off a chain reaction that slams into New Zealand's housing market like a wrecking ball? And not the sexy Miley Cyrus kind. Kelly, is New Zealand property still a secure investment in a turbulent global landscape?
Well, I think there are reasonable factors that are going to support the housing market if we look forward through the next year or so. Lower interest rates are really looking like they're having an impact through on the market now. If we look through some of the leading indicators, I don't think we're really heading into a boom with respect to the housing market, but I think we can reasonably expect a cyclical recovery as we go through this year.
And how are these tariffs that Trump is talking about every other day, how are they going to impact the New Zealand property values?
So I think they'll impact the property market if they have impacts on interest rates, the trajectory of the economy, and particularly the labour market. Our baseline view is that the economy is going to have a cyclical recovery. So that small level of positive GDP growth that we saw at the end of last year should gradually strengthen to trend and then modestly above trend growth as we go through this year and into next. In that environment, we would expect that the housing market would gradually find a firmer footing as we go through the year. If Trump's tariffs derail global economic growth or put a particularly high impact on interest rates, or if they boost inflation too far, well, these are all things that kind of could really mess up that nice cyclical recovery that we're anticipating.
And how's this conflict between China and US? It seems to be deepening. How's it going to impact a little country at the bottom of the globe?
Well, New Zealand's a trading country, so we care a lot about global trade flows, and our interests are always best supported if people aren't fighting with each other. One of the things about tariffs is that it's going to be worse for everyone if there's a lot of tit-for-tat retaliation. You know, if one country puts a 20% tariff on someone else and then they respond with a 30% tariff and so forth, that just means that the economic impacts of the tariffs get amplified. And that's obviously pretty bad for a trading country like New Zealand. If you think about China, they're our biggest trading partner. Anything that undermines Chinese growth is actually bad for us.
And do we have a little bit of a currency chaos at the moment? Is this trade war induced drop in the New Zealand dollar, is it going to impact house prices and the mortgage rates?
Yeah, so the exchange rate is actually one of the things that will help buffer us from some of those trade impacts. So exporters, whilst they maybe got reduced demand, potentially reduced incomes if they're being subject to tariffs, or some of the countries we trade with have got less demand, the lower exchange rate helps reduce the impact on them. But as you've pointed out, the flip side is that for consumers here, a weaker exchange rate means higher import prices, and that's higher inflation. And if it's ending up being quite persistent, then it'll be something that the Reserve Bank cares about when it's deciding what to do with interest rates.
Just a reminder, your competition has already subscribed to the fastest growing property and investment channel in New Zealand. That means they're getting the insights first, making the moves first, and locking in profits while you're still debating whether to click a button. Be smart, subscribe. New Zealand property investors, how should we look to hedge ourselves against these risks?
Well, there's not much you can actually do about what Donald Trump does, because Donald Trump is going to do what he does. But in the end, if you're thinking about leveraging to kind of like buy into property, you've got to make sure that your balance sheet is sufficiently strong that it can weather a wide range of circumstances. Banks quite often have a look at that when they're deciding how much money to lend to a borrower. That's why we have things like test rates, which basically says, well, let's pretend the interest rate's actually going to be a bit higher. Will the borrower still be able to pay? But that's going to, in the end, be the best you can really do, is to kind of like make sure that your financial circumstances are going to be robust enough, even if things go a bit rougher.
Yeah, and if we look beyond Trump and America, what other geopolitical risks and topics should we be looking at? Do we need to take a closer look at what's going on in Europe or Asia?
Yeah, so another thing that's going on here is there's been this heightened geopolitical risk going on. Right now it's really between the US and Europe, where the US has indicated less of a willingness to contribute to the security of historical allies. How Europe has responded for that is to recognize that they probably have to divert more of their own resources to their defense. And there have been a couple of significant packages announced by the European authorities to boost the defense spending. And what that means is that it's going to provide a bit of a boost to those economies because they're going to borrow more to spend more in their own countries. So that could actually be a useful offset in some of those countries, because let's say the Trump tariffs are derailing growth in Europe a little bit, or maybe a bit more fiscal spending could actually offset the impacts of that for a while.
Yeah, well, if America is going to be the world's police, we do want them to be a strong economy, and if they need to spend less abroad and more at home, then so be it. And this Westpac nowcast model, is this data real-time data that we can trust, or is it more crystal ball gazing stuff that kind of leads us astray?
It's an actual statistical model. We're basically taking in all of the really high frequency information that we get that is often useful in forecasting GDP growth. Some of the data is available weekly, so some of it is available monthly. And we've put it through a statistical process to try to remove the noise, because there is a lot of noise in high frequency data. And then pulled out the bits that seem to be most useful in forecasting the underlying trend in GDP. And it's good because we can basically give you an updated estimate of that every week, giving you a bit of an idea of the pulse of the economy.
Well, I really do appreciate your insights, Kelly, and recommend people check out the Westpac economic data and reports you guys are bringing out all the time. It is truly valuable. Thanks for joining us again, Kelly, and we'll get you back again soon.
Thank you very much.
Just a reminder, every video here gives you an advantage in the property game. If you want to own property or just like the idea of financial freedom, subscribing is the easiest, smartest decision you'll make today. So do it before your competition gets further ahead.
Less debt, more cash, passive income coming fast. Make your money work for you. Live the dream, it's overdue. So don't just wait, take control. Mortgage HQ will make you bold. Financial freedom's in your hands. Take that step, it's time.